Good morning, it's Jonathan Barrett with this week's Market Buzz. It's Monday, the 8th of June, 2026. And as we can see, quite a large sell-off in the US equity markets overnight. I guess across the board, Nasdaq was down 4, I think about ended up being down about 5%. S&P down about 2.6 and the Dow down about 1.5. Basically, it was all on the back of stronger jobs data. We will have a little bit more of a read on that throughout the market buzz. And US jobs put on 172,000, and wage growth was also steady about 3.4. That sent a bit of dynamic going through the markets, which might continue into the week. Let's really see how those macros really unfold. But certainly a key change there because some very strong numbers and some very strong revisions as well. And I think anyway, let's see if we've got a top in place on the equity markets. Oil continued to slide. That's down. On the week, it was around about 3%. And that's reflecting what's happening in obviously Iran and the US and talks. Looks like it's stalled as we know, but there's still a bit of tit for tat going on there, and we're no closer to a resolution. So still quite volatile there. I think one of the other key concerns there is that on the WTI economic growth, how that's going to affect the demand. We did notice in China, though, Chinese oil imports fell to this lowest level in 10 years. That's a reflection on what's happening economically in China. Also a reflection on how they're seeing with the alternative energies. So that's also an interesting space to watch at the moment. Gold sadly plunged, and so did silver, around about 4%. And silver actually dropped around about 8%. Now, that's contrary to what we've actually thought about where we think those two metals will go. Time will tell on that. As an old trader always used to say, sometimes it's better just to put a little bit of ice in the belly. You'll never get the timing right on some trades, but if you think the fundamentals are still there, which we do, then this is just a pullback. Might even be an opportunity to add to positions, but I certainly want to see if there's a bounce first. Okay, right, so there's lots to talk about, and I think in this market buzz, it's prudent to actually have a look at what's happening with the non-farm payrolls data and wage growth. Now, the reason I like to have a look at those two is it's going to be an indication of what the Fed will actually do and how monetary policy will actually play out. Now, interest rates in the States, the yields have picked up. The market is saying now that the Fed will move from that dovish phase that they thought into more of a hawkish phase where the rates will go up. But I think what it'll definitely mean is that rates will stay higher for longer, and that's going to have some implications to company earnings, and that's why we've seen the equity markets come off. I guess the most important thing there is when you go through some of that data, you can see that you had an increase of 172,000 jobs. The market was only looking for about that 70 or 85,000. That was the general consensus, so it was well above expectations. Furthermore, we had a revision for last month's as well, up by another 179,000. That's telling us that the job market is super resilient. And it could also sort of suggest that normally the Fed would actually look to tighten rates. Now, that's not the case this time around. And the reason that's not the case is we have wage growth that comes out at the same time. And to me, that's the most important thing. When you have, the jobs number looking quite aggressive, and that's 2 in a month, the Fed will start to look at, what's actually going to happen there and whether that's going to be inflationary. And to me, that's something. So when you look at that, the revisions are higher, everything's positive, and then you look at that wage growth. Now, we put a great little chart in this week's buzz, and that's wage growth versus non-farm payrolls. We've had a lift in non-farm payrolls, but historically, wage growth is quite slow. That came in at 3.4%, and that's moderate to what we've had before. If you only think July 2022, we're upwards of 12%. July 25, we were sort of up around about that 5-6%. So it's still quite low, and that's telling us that it's not that inflationary. So the year-on-year number, 3.53, that's not a bad number. And the Fed's going to look at that and say, well, we'll monitor, we'll keep rates high, but we're definitely not going to cut. But what we will do is interest rates might move to more of a hawkish phase down the track, but nothing unless we get more information another couple of reads the next couple of months to actually push that along. And I think that that wage growth is quite important because if it does accelerate inflationary pressures, that's the case, then that's got to feed its way through the economy. And that's why we've seen equity markets under pressure. And also, US dollar lifted naturally as a result of that because it's a high yielding currency. So, quite important there on that. You can also see that when you look at wage growth over time, I've got a lovely little chart in there too, where you can see where it's been subdued. And that's one of the reasons why the Fed hasn't really reacted how we would have expected them to react. So a good number there. Obviously, US dollar up, equity markets lower. We'll have to see how that trend unfolds, how those macros start to unfold in the market. Because if the macros are there, then we've got a top and equity markets will come under a fair bit of pressure, which is favourable to our position. But we've been underwater for some time on the equity side, and that is a concern. Anyway, let's see. Okay, this week on the data front, what have we got? I think really Iran US will remain a headline with what that'll help to dictate what markets do. Again, we know that's the case. We've also got some trade data, inflation prints out of China. That's going to be really important. European central banks and Bank of Canada will set monetary policy. So that's also good. GDP out of the UK. And I think in Australia, I don't think we've got a lot in Australia. So anyway, let's see what happens there. One other thing which is important on the corporate front, SpaceX will undergo what is likely to be the largest IPO on record. So keep an eye on that and see how that all unfolds. Interesting to see. It's interesting to see what actually happens there. Okay, let's now share my screen, and we'll have a look at the position front and what we've been looking at. Okay. Right, no, right out of this, here we go. As you can see, first gold. Gold, as you can see, a little bit of a movement to the lower end on gold. If we get a break back above 44.50, a little bit more encouraged that we've got a low of some significance. But as you can see, when you do look at that chart, under quite a bit of pressure there, and I'll just put that there. Oops. There we go. Can't see that. Why can't I put that on? There we go. Little cursor. So yeah, so as we can see, right at those support levels, we need to see a break. There's a good trend developing on the top side. So really want to see that it hold here and move back to the top side. 4450 break of that confirms a low. Let's see what happens on that front. I still think it's constructive, but this is a blip. And you can see here too on that hourly chart, it's really got to get back up through these levels here. If it does, low of importance. If not, okay, more sideways price action there. Okay, now let's look at silver. And as with silver, like with gold, had a little bit of a fall, and then right at the lower end there, similar story to how we should trade silver. Just wait for that dip. And if we get a dip and a break back through 72.50, things are okay, then that looks good and onwards and upwards. And with the silver, that'll line up with our fundamentals, which we really like as well. Okay, now let's have a look at some of the equity markets. Let's start with, there we are. That's the first fall. Up the top here, momentum indicators are suggesting lower. That is the S&P 500. And yeah, with momentum like low, the technical side is there, the fundamental side there. Could quite easily come back to that 6,700. It's about 350 points. And then we'll see from there. But this is a correction underway. It might last for quite a few days. So let's see what happens. Unless, of course, we get some euphoria over a resolution of the US-Iran situation. Now, on the back of that, and I will just have a look at the Nasdaq. Nasdaq has been quite important because that was the largest move. And as you can see, similar type of story unfolding there. There we go. Quite a bit of a fall. And I think if anything, oops, there we go. I don't know what's happening there, but there we go, moved across. There we go. There's that fall. You can see a little bit of support at 28,700. But as we said, look for a bit of a deeper correction. And I think that's the case. Okay. Now have a look at the oil trading in a volatile range. We're expecting that continue. It actually does look a little bit more positive, but I like the way it's trading breaches and pullbacks. And that might indicate that something might happen for a test to the top side again. We are at the lower end. It is a trade which is a breach and a pullback. It does also suggest that it can from here trade higher, but we'll have to see. That is guided by what Mr. Trump wants to do, President Trump. So we'll just have to sit back and see see what happens. But a break back through that 99.30 onwards and upwards she goes. Okay, so that's it. Luck on the Aussie. Well, the US dollar, I think, is probably something to have a better look at it because the US dollar, we are short the US dollar because we're short the US dollar via long Aussie and long Aussie Swiss. So with the Aussie where it's trading at the moment, it is a bit of a correction, and I expect that to continue for some time if the US dollar holds true to where it is. So quite a large fall from that 72, 71.50. We need to see it break through that 72.50 or onwards and upwards, but I do think we're going into some consolidation. So once again, a little bit of ice in the belly for that position, and it's still yielding our way, which is great. Okay, that's about it from me for this week. Hope everyone has a great week's trading. Keep your powder dry for opportunities, and we'll certainly talk to you next week. Bye for now.